Good morning, traders. It's 8 a.m. Chicago time on Wednesday, the 19th of October, 2022. This is episode number 2339. Thanks for joining me this morning once again. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let me know what the sound is like. Do I sound vibrant and clear, or is it too loud, overmodulating, and so on? It's really hard to tell with all this compression and stuff that Windows does and YouTube does. So let me know when it's too loud. Diving right into the convergent trading pre-market summary sheet. Let's see, this is a pre-market summary sheet this morning. We're looking at a market that is risk off, mild risk off this morning. We had a very interesting overnight session. We'll look at that in a minute. Of course, focusing on the ES. I would love to, during the trader bite, focus on ES, NQ, CL, and a treasury probably, but we don't have that kind of time. I know that it would take probably an hour to cover those. So we'll focus on the ES as always. Key earnings. Some of the stuff that you should know is that United Airlines had just super hot earnings. It beat by like 25% or something. I don't remember. But that's not a surprise given the Delta release and the fact that people are just spending money on travel. Have you looked at hotel costs lately? It's just pretty insane. So lots of money going into travel. People are just making up for 2 years of not being able to go anywhere. So United Airlines did great. Netflix had blowout earnings yesterday. So right after the cash close, we wiggled for a little bit and just took off. It lifted the indices across the board, especially techs. Although Netflix has little to do with what some of the tech heavyweights like Google do, but Netflix beat by like 45% or something like that. Record subscribers, completely unexpected. So big boost in the overnight session early on, and we have come off since then because a few more things happened. Namely, the inflation number out of Great Britain was very hot. It moved into double digits at 10.1%, expected at 9.9%. It just, the UK really is having an incredibly hard time managing the macro side of the macro economy. The treasuries, the gilts, and the currency itself have seen some real crazy moves. UK pension funds have been squirming and screaming for help. And there are some painful decisions that need to be made by the ECB and the new prime minister. She tried to come in and do a tax break, a corporate tax break, and so on, which the market responded to poorly because they saw that as stimulus when inflation was already hot. So the currency dropped dramatically. That was 2-3 weeks ago. Just in one big move, the currency dropped quite a bit. And then the chancellor was canned and a new person was put in, and now they're walking back some of that. But the UK saw some really terrible, some really high inflation, and so the market responded with a pretty decent drop here. Overall, we're just whipsawing in a wide balance range, which we'll talk to. If you were here on Monday, you recall me talking about this, that we are in this wide balance, and it's likely to be a pretty volatile whipsaw kind of range, and we're seeing a lot of that now. It's not that I'm an oracle can see the future. It's just what the market, I'm just reading what the market's already telegraphing. Pre-market, we had Elevance Health, we had Procter and Gamble, which was in line basically. We had Abbott Labs, which beat by 22%. We had Travelers Companies in line. We had Lithia Motors, which lost, which came up short by about 8%. ASML Holding, Baker Hughes, basically in line. And then after the close, we have Tesla, IBM, Steel Dynamics, PPG, and Alcoa. I welcome you to go and check out an earnings calendar. I don't need to go through those. In terms of the other pieces, key figure today, inflation rate out of Canada came out at 6.9% versus 6.8, the prior 7. And so came in a little hotter than expected, but less than the prior. So it's not cooling as quickly as was anticipated. Housing starts in the U.S. came in weaker at 1.439 million units versus 1.465 million units, and building permits came in strong. Building permits turn into housing starts at some time in the future. Came in hot at 1.564, so more supply or more inventory coming in housing. The expectation there was 1.487. So the market moved lower, and it banged up against the prior low or the high of 2 days ago, and it bounced up. We saw a lot of activity at the lows. We'll look at that. For the rest of the session, we've got crude oil inventories today from the EIA, gasoline inventories. We had Fed's Kashkari, Fed's Evans, Fed's Bullard. And then later in the evening, balanced trade out of Japan and unemployment rate out of Australia at 8:30 p.m. Eastern. And the loan prime rate out of China. This is an important one. It's not highlighted here or bolded, but it's something that's been watched and talked about recently. And also at some point in the day, I didn't get, if anybody knows the time, let me know. But U.S. President Biden is supposed to release comments on oil, on what the government's doing about the SPR, and so on. So that's that. Now, let's turn our attention to the S&P. The S&P has a multi-distribution profile in the overnight session. Let's switch to the chart so we can look at it. The S&P has a multi-distribution profile, and real quick, 380,000 contracts traded. The inventory is almost balanced above and below the close in terms of volume, and 72.5 points of range. So here's another day. The market is presenting another day where we have pretty good range. So there's likely to be a lot of opportunity today. We are still in balance. Despite the action that we're seeing, we're still in balance. We are just in a wide balancing range right now. Point of control is above 3710. At 3710, above the 3700 still. We've fought down into the 3700 a couple of times now, and are holding steady. The low at 3701.75. The volume is higher than one standard deviation of volume over the last 252 sessions. So quantitatively, the volume is higher than what we would consider to be normal over 252 sessions, which represent 1 year. Exactly 1 year of trading is 252 sessions. So what do we have here? Look at this baby. Yesterday, we popped higher, right? We opened higher. We had this balanced day. Then we popped higher, pushed right through in the overnight session, pull back, and we were strong when we came in. And then as soon as we open, we wiggle around, we push higher, we take out the overnight high, and then from there, we just simply retest these day type levels, and we continue lower to push into the prior high. So we managed to push into Monday's range, RTH range, Okay, so that's a 37.0250. Yesterday we got into that. 36.97 and a quarter is the low. We managed to get in there, and then we bounced right out. What I would have liked to have seen is for it to bounce out, have a weak bounce, turn around, and start to push down to grab the prior settle so we could get a big external gap or a gap zone to settlement. Big trade there. I wasn't on the short as early as I would have liked to have been. So get back to settle, come back, test that balance from Monday, wiggle around, and go back up. And it couldn't do that. It went back into the range, and then you could see that there was quite a bit of lifting on the way up. This accounts for a small impulse up, right back into this. For those of you who are part of Convergent, we talked about this at length. The day reference, day level sandwich between the 37 and the 41 yesterday was really important. The expectation is we would grind in there, fail, and then potentially get up there, pull back to it, and push higher. And guess what? Those of you who did attend the trade talk yesterday at 1 p.m. Eastern probably saw this play out, but it didn't play out the way we had kind of talked about. It played out much later. So here it is. We push up and hold just short of mid. This set up the 30 short, right? And did it set up? Is this the 30 short? Yeah, this set up the 30. No, this actually pushed up. It stopped just short of the mid and the RTH VWAP. Came back off, took out the prior low, looked weak. So now we expect it to try to push to that high, make a weaker high, and then make an attempt at the low. It did not. It found support right here and then pushed back into this multi-level sandwich right here. Again, the 37 to 41 pokes through just enough to trigger stops and then pull back and an impulse down. So now we have an impulse. We're looking for a pullback for a continuation. We're looking for this low to be taken out. Puts in a higher low, chop basically. Puts in a higher low, lower low, and then pushes back. But here's the setup that we talked about that was expected into the close is a strong break of this IB low. Again, pull back to the IB lows. Look at that. Very, very quick. And then rally towards at the time we talked about the idea that if it pushes through 41, especially if it pushes through 50, which was something that one of our mavens, John P., brought up. If it pushes through the 50 here, then we're looking for this thing to really make a run to the open. It ran out of time, but then Netflix got the job done, pushed right up to the open. So my point in that lengthy description of the price action or the anatomy of that movement is that it's technically trading. The auction is technically following the rhythm that we would expect. It just isn't doing it within the expected time frame. So here's the overnight session. So we open up, we don't open up, but we remain open into the we close right in here, and then we continue to trade. Netflix comes out, pushes through, gives us a continuation right there. We have a weak high, and then from there we fall below the mid and VWAP, and then we get the continuation. So from here you're looking for price action shorts, something like a pullback to there would be a price action short, and so on. You're looking for an impulse continuation pattern, and it just, that's what we did overnight. Nice little retest of the full session VWAP and mid. The VWAP at the time was at 37.50. It pushed all the way up to 53. That would have been a stop. And then we have this continuation. It's all during the European session. The news out of Great Britain came out at 2 a.m. Eastern, right at the European cash open. And then from there, really has been weak, and it remains weak. Now that we've pushed, after the housing starts number, we pushed lower, 730, right here. We pushed lower, but what we're seeing is a little bit of a battle against yesterday's, or the low of 2 days ago at 02, whatever. We're seeing some support into this 3,700, and we appear to be wanting to open close to that 3,700, which creates a bit of an issue here because it creates an area where there's a little bit of interest from both sides. So this might be a noisy open. We are still inside of yesterday's range. We're opening against the low of yesterday's range. Let's switch this. We're opening against the low of yesterday's range. And overall, we're seeing this thing, coming into the prior balance right here, bouncing back up. And yesterday, really, it formed a P-shaped profile. It opened at the high, but it closed in the middle. It didn't close at an extreme. Again, I want to emphasize not to lose sight of the big picture. Yes, we can scalp the market intraday. We could take small structural or big structural intraday positions, but let's not forget where we are. You have to really, as a trader, you have to maintain a grasp on what's happening in the big picture and where we are. Because if we open up here and we're trading up here, it means something very different than opening down here and trading down here, even though those represent a gap. So what we did yesterday is we opened in the middle of the upper distribution. We've talked about this, these 3 days of balance right here. See this? This is balance. And then we pushed through the low volume zone, and we started to push into the most recent accepted area, pushed to value high of what is a balance profile, so valid value high, and then we bounce back up and we finish in a bounce profile with a B shape. So a little bit of a long liquidation, but essentially what the market is doing is it's saying, I know there's interest up here, and I know there's interest down here, and I've tested down here, and I've tested up here, and now I'm just filling in the middle. And that's what we did yesterday. All we did is fill in the middle of these, the middle space in between the two distributions. There was a gap there. We're filling that in, and this morning we're just a little bit lower on that distribution. So what does that mean? That means it is very likely to trade yesterday's value area. So it is very likely to go from the 3702 all the way to 3740. That is a fair game for today's trade. What would be an interesting trade today is an attempt to move back to the point of control from yesterday, which volume wise was 2750, something like that, 2750. And in TPOs, time-wise, it's a little bit higher at 37 or something. What we're likely to do is pull back, and it's really important. Okay, let me say this very clearly. It's very important if we get responsive buying back to the point of control. It's very important to watch if that price is rejected. If it's rejected, it sets up a selling setup, and that selling setup is likely to move us out of this balance into the lower balance. We're likely to visit this point of control down here that we left behind from a couple of days ago. So we're likely to see the 3980s. So if we get responsive this morning, close the prior settle, close the prior point of control, and reject it, then it is the day's range, which is expected to be around 70 points, is expected to then extend to the downside, creating a tremendous short opportunity. If it pulls up and then accepts that price, breaches to the upside, breaches value high, and gets back above 37.50, then we are likely to see this whole wide overnight range that we've traded. We're likely to see that get squeezed, and we're likely to see ourselves all the way back into the 37.80, right back up here, right into this balance, and we are likely to test all the way up to around the 3,800 in that case. So where we are currently at 37.08, add 72 points to 75 points, puts us at 37.80 or so, and that's what I'm expecting if it cannot hold the prior settlement and the prior point of control on a test up. If it has no energy to test higher because it's, this UK inflation, Great Britain inflation number is meaningful, then it is very likely to extend down and start moving towards the composite down below, which comes from here. And now we're looking at 3,600 as the potential. That's quite a bit of distance from here. It's 110 points, but it becomes the next key area to test. Now we're testing balance down here over not just today, but over maybe the next couple of sessions, today or tomorrow, and so on. So what does that mean? It means that we have to watch carefully for what it does this morning in terms of how it checks the prices to the upside. So here we are again. The scenarios are an open auction that takes out the week low, tests the overnight session. Low gives us the overnight stat, and then starts to move back to prior settle right in here. If it cannot hold this prior settle, and yesterday's point of control, remember the point of control in volume is lower than the point of control in TPOs. In either case, look for settlement. If it cannot hold settlement, if buyers cannot move to settlement and hold, this is likely to sell off pretty quick down into the prior point of control and traverse this balanced day that we had on Monday. It becomes a big selling opportunity for today. That's the primary scenario as we have tested the prior high and failed to continue higher in the overnight session and given the weight of the news that's currently there. The secondary is an open auction that tries to go down, comes back up to settlement, fights here for a while, finally takes settlement, creates a weak pullback to settlement, setting up a run for the 37.80. In that case, the 80 fulfills the day range stat, and we expect it to push back to that naked point of control at 37.80 up here. Those are the two key scenarios, and the line in the sand is going to be this settlement price. If we can take back settlement and go positive on the day, it's likely to be a squeeze. Remember, in the big picture, we are in balance, so these squeezes are going to happen in either direction because we are in balance. That's a very long trader bite. Hopefully you picked up a lot today about the logic. Look at how weak the price action is in the, let it load. Look at how weak the price action is in the overnight session, but look at what's happening here. We have the bigger players not participating in a selling at all, and it's almost completely controlled by small lots. This can be reversed very quickly for a case of responsive buying. What happens once we get the settlement? That's for the market to tell us, but this is what it looks like right now. So right now, yes, the cumulative delta is short with price, but there's very little participation by anybody that is trading 10 lots or higher. There are no huge commitments to the short side by sell aggressors, okay? So take that into account. Good luck, and I will catch you tomorrow morning. Take care.